Welcome back to the channel. Today's topic that we're going to talk about is, am I withholding enough tax from my IRA withdrawals? Now, if you're new to the channel, my name's Chris Hammond. I'm a financial advisor at Hammond Wealth Advisory. We help out our clients that are getting ready for retirement. Maybe they're already in retirement. Make sure they have their financial plan in place that's there to help them meet their goals, and so that they don't have to worry about this and they can just enjoy being retired. And on this channel, we talk about all of these different topics, maybe from a 20,000 foot view looking down, but that's what we specialize here at doing. In today's topic, I want to talk about how to help you understand if you're withholding enough tax from your IRA withdrawals. And I think the first thing to ask about this is, what does it even matter? What does it matter if I don't withhold enough tax from my IRA withdrawals? Well, it may not matter a lot for some people, but it possibly could, in that you may have to pay underpayment penalties. So, when you do your taxes at the end of the year, and let's say you get a refund. If you get a refund because you've overpaid, they give you back what you overpaid. You essentially gave them a loan for that year when you had overpaid, and then they'll give you the money back in April when you do your taxes. Now, do you get interest on that or anything? No, you just get your money back, right? Now, if you underpay though, and there's certain guidelines in place about how much underpayment, and when you break certain thresholds, when you may owe a penalty on that. But if you underpay and break those thresholds to a certain extent, they make you pay them interest for that because they've essentially loaned you money during that time. Okay. So that's how it works. So you want to be careful about not having to pay an underpayment penalty. Now, it may not be a big penalty, it may only be $100, $200, $300. Could be more. I don't know. Everybody's situation is different depending on how much they owe in tax and how much they had paid during the year. But if you could avoid paying that and it wasn't hard to do, would you want to be able to keep that money in your pocket instead? Well, in today's video, I'm going to show you some guidelines about how you can approach making this decision of how much you should withhold from your IRA when you make withdrawals from it. So the estimated tax penalty, you'll be able to see that if you owe it, it'll be on the second page of your 1040, and that's where it will show up. Now, this is using 2022 forms, so depending on what year it is, these forms change all the time, but it's usually on the second page is where it's going to be. So the first place to start is with your marginal tax rate. Now, what you see right here is a chart of the 2023 marginal tax rates for married filing jointly, a couple that's married filing jointly. And you'll see it's based on taxable income. So let's talk about what is taxable income. Well, let's say you made X amount of dollars for the year. Then you have your deduction that you get to take on your 1040. Most people take a standard deduction, but hey, you may itemize your deduction on a Schedule A. I don't know, but let's just say standard deduction. So here's what you made. Here's your standard deduction. Subtract that from what you made, and that lower number is your taxable income. That's kind of in a nutshell, broadly speaking. That's how that works. Now, whatever that taxable income is, that wherever you fall in that, that's your marginal tax rate is what it is. So any additional dollars of income, like from an IRA withdrawal, for example, that would count as additional income. That's going to fall in that tax bracket, and it may even push you into a higher tax bracket. So for example, let's say you're in the 12% bracket, and after your deduction, you had taxable income of $89,450. And now you're wanting to take a $10,000 IRA withdrawal, and it's going to push you, that $10,000 will be taxed in the 22% tax bracket. Okay, so that's how that works. So if you see that you're on the cusp and any additional income is going to push you into another bracket, you might want to have more tax withheld from your IRA withdrawal than just what the marginal tax bracket is that you're in. But this is one good way to start and look at that. Now, you can take some other steps as well to kind of fine tune this a little bit more. You could look at last year's taxes owed. Now, why would you want to do that? if you found out last year that you underpaid and maybe you had a penalty that you underpaid and you're not changing any of the withholding standards of these other income sources that you've already had, and now you want to throw another IRA withdrawal on top of that, then you may want to have even more withheld from that just to make up for the taxes that aren't withheld from the other income sources. Well, how would you know what additional amount to withhold? Well, you could look at last year's taxes owed. You could go and say, well, this is page 2 of the 1040, and you could see that right there is where your total tax is that you owe for the year. Now, a lot of people they get confused on this because you might do your taxes and say, I turned out pretty good. I got $5,000 back. But all that means is that your payments that you made during the year were greater than the tax owed, and they paid you the money back that you overpaid, but you still had to actually pay the total tax. So what you want to do is you want to look and see what is the total tax that I owe. If you underpaid, that's where you're going to have to bring money to the table at that point. And if you're not changing any of the withholding standards on your other income sources, then you might want to withhold more than your marginal tax rate from any additional IRA withdrawals that you take just to make it up. All right, so that's the other guideline that you can look at there. Now, the last one, and this is really applicable, as I say on this channel, we focus on helping out people that are getting close to retirement or they're in retirement. So Social Security benefits are going to play a role in that. Now, not all Social Security benefits are subject to tax. In fact, some people don't pay any tax on their Social Security benefits. And there's two cells blocks that you can put your Social Security benefits in on a 1040. One is what your total benefits are. That would be here in box 6A. And then the next one would be, well, what part of those benefits are actually subject to tax? They get counted as income and you have to pay tax on them. So the tax code has different thresholds in place when you start going through different thresholds of income and the way they calculate it. Some of your Social Security may become subject to paying tax and you have to claim some of it as income. Well, what that means for you is that IRA withdrawal that you're thinking on taking, you pull that money out of the IRA, it may actually cause some of your Social Security benefits to have to be claimed as taxes. Now, here's what that could look like potentially. Let's say that you're in the 12% tax bracket and you're going to pull $1,000 from your IRA. You got to claim it as income. And that causes an additional $500 of Social Security to be taxable, which was before not even taxable, but now it makes another $500 taxable. Well, that means you're going to be paying in that 12% tax bracket an additional $1,500 because of that $1,000 IRA withdrawal that you took. Well, 12% of that is $180, and which is essentially like an 18% tax. So in that case, it might make sense to, even though you're in the 12% tax bracket, to withhold even more from it, maybe 18%, to cover the fact that it's causing more of your Social Security benefits to be subject to tax. Okay, so these are some things to think about if you're wanting to kind of approach this idea of saying, I don't want to pay underpayment penalties. I mean, they may not even be that much, but I don't want to pay and leave a tip to the IRS when I don't have to. These are some guidelines you can use to help avoid that from happening. Now, keep in mind, these are just guidelines, all right? There are other factors that could affect the taxes that you owe at the end of the year. The tax code is complicated, and there's things that you can do in one area that can impact another area as well. But this is a good place to start right here. Now, if you need any other help with planning on your retirement, good resource that you can check out is the Essential Step-by-Step Retirement Guide. It's very easy to download. You just go down to retirementplanningmadeeasy.com and you'll see a link where you can download it there. It's going to go through some really important things about figuring out what are your expenses in retirement. How are you going to fill the gap between what your expenses are versus what your income sources in retirement will be. And then it also helps you kind of talk through and think about different ideas about investing and what do you do when certain things happen in the market, kind of developing that mindset of how to be a long-term investor in retirement. That's all I've got for this video. I'll see you guys on the next one. Thank you so much for taking time to watch.